Hey, everybody. Welcome back. And if you're here today and you've not already left, you're a real trader. You're committed to the markets as we are. So thank you for coming. Uh, Today's presentation is about sharing some of what we do, which we do every MT Live, in addition to you giving us one or two of your trades to review and having discussion with everybody here, what's good about it, what's not so good about it, what's great. Um, and so as we go through that, like every MT Live, it's about learning and sharing what we've been doing for decades now with you and helping you to advance with your own trading strategies. Hey, Andre. So let us get to it. So a little bit of review. As you know, I should know, Dan has been doing a presentation. And where is that other presentation that he shared with me? Hold on, folks. I thought I had it open. Oh, can I advance it from here? Oh, cool. There we go. You know, Dan usually advances the slides and, we had our discussion. So if you've been here before, this is something that we always review because it's what we do. It's based on what we call MTS, the method. About combining all of these concepts individually to put together trading strategies. One in of itself is not a trading strategy. It's not a reason to place a trade. As you put them together, it formulates strategies, gives us a bias, and in the end, tells us when to press the button ultimately, and of course, how to manage it. So price is king. What does that mean? Well, the short of it is we don't use indicators. We put a couple of moving averages on the chart, but the indicator-based methodology is something that, from my personal experience many years ago, was just going down the rabbit hole. A lot of confusion, a lot of different settings, a lot of choices as to what indicators are right or wrong. And personally, I couldn't figure it out because there's just too many variables, too many choices as to um, someone advertising, I guess, their software there, Fireflies, whatever. If it's useful, good. So price is king. It's what we trade. You can't take it off the chart and make trading decisions. Ultimately, if you take everything off the chart, um, you can still place trades. Candlesticks, why? Because it creates pictures. The essence of what we do is when you really cut to the chase, we look at pictures in a candlestick format that displays to us where other people have traded, what they're thinking, what their beliefs are, and what they're likely to do. That's how I look at charts because it's a reflection of ourselves and other people and who's in control. If it's in an uptrend in the time frame that I'm using, buyers are in control. If it's chopping sideways, it's confusion. And if it's going down, sellers are in control. When it reaches an area of support or resistance, this part right here, when this gets down here, that tells me that maybe there's going to be a change in control. Multiple time frames. This is something I spoke about today, pre-market. The weekly is in an uptrend. The daily has been correcting for a while. It came down to major support. It violated it. Seasonality, right? Interest rates, intermarket analysis, and I call the three-legged stool, market internals, and intermarket analysis comes together to helps us formulate those intermediate term strategies. That's multiple time frames, trend analysis, bar by bar. A lot of people, where did that come from, bar by bar? Well, it proved to be a very powerful concept of looking at individual bars and putting them in the context of what preceded it. And it didn't come from the point of view of putting it together with a trading strategy on how to take advantage of trends. Ultimately, I formulated this because when you're starting out and you're really not so sure about what you're doing, maybe you have some small idea of what you're doing, but you see this red bar, you see a topping tail bar, and it's like, oh my God, the trade's going to go against me. Well, not necessarily. Put it in the context of the trend, support, resistance. Is there what we call a tradable void? And all of those things, all of these together create what I just call a thought process, relative strength and weakness. It came into this week, I thought, because the NASDAQ 100 and the semiconductors were down more, that they would begin to outperform. Lo and behold, the lowering of interest rates helped the small caps and the regional banks. And biotech has been doing great, primarily because of evolution of AI. And that has its pluses and minuses. So the Russell 2000 really outperformed. And as I'm looking at my charts, it continues to outperform. And momentum has slowed a little bit, but yeah. And so volume, a lot of people make big deal out of volume. For me, two things with volume. Is there a volume spike, which tells me to pay attention? And is there liquidity? Other than that, it's just too much to pay attention to because it's price. As I said, that's king. Internals, and this is really, I don't know why we put it on the bottom here, just fits there. Maybe it's because this is what the majority pay least attention to until the pain increases. Position and money management. I've got it right on the page of the money management page that explains the course. And it says there, would you enter a business without some type of money management rules? And of course, the answer is no. But all of us do this when it comes to the stock market and trading. Money management is secondary because we're all greedy. And, we think about the money, but eventually we, you know, make those mistakes. It gets some pain inflicted and you begin to pay attention to that. And the trader psychology, there's some great books on trader psychology. Ultimately, it'll come back to position and money management. All the mistakes as far as greed and fear of missing out and all of that, it all comes back down to money management. It's really the true key to success here and lasting. So, as I said, price is king. It's what we trade, forms patterns, and as I said, ultimately, that is really the essence of what we're doing, looking at pictures in the context of trends, support, and resistance. It's really not complicated. What's complicated is following the rules as you put the rules together. Excuse me. Candlestick format, and then
Yeah, I think you could skip these two. These are just a different way of showing that first page.
okay, you created it. I'll
Yeah,
follow the direction.
yeah.
All right. So we always look at this slide, and it's a starting point. And I always like to reinforce what we say and what we do. This of in itself is not a strategy. You got to go back to the first slide: support, resistance, trend, relative strength and weakness, and so on. So a buy setup. That's a buy setup without everything else? Well, it's a little fragment of the buy setup within the trend, support, and resistance. It's just your simple pullback and reversal. A red bar ignored. There's plenty of these that have happened this week because the markets are in that holiday mood for Thanksgiving and they're trending up, and red bars that formulate in an uptrend often do nothing because they're just as transition from red to green. It's a continuation pattern, right? A little breakdown failure. This is a great one because if you have a bias that prices are going to go up, when it goes sideways for a little while and pokes down, it sucks in the very short-term traders. And when it flips back up again, they buy to cover, demand increases, and prices lift. Now, this one I made here because it reinforces, first of all, retracements. Right? Some of these are retracements, down, transition, right? Transition here, if you look over to the right here, I usually say look over to the left, but go read the chart of the week from this week, the transition from red to green. This is it. Red, the middle, the transition going up. It's a very good understanding of how to look at multiple time frames and why red bars are ignored. This one here just doesn't have the little candle in the middle. It's what we call a 180. So these different patterns, most of them are just expanding or contracting data for us to see pictures in different ways, but they all communicate bullish trade setups in time frames. When it says all time frames, it's not to say every time frame is the same. It's to say that these pictures are created in all time frames. The real art of what we do is how to combine those time frames. And there's a lot, not all of them, but you got to pick a few. Right? Failed sell setup, similar to this, looks a little different. W bottoms, retest and reversal, 1, 2, 3 patterns, one of our favorites. So again, you look at these different pictures on a different day, on a different stock, it's going to form one of these in a bullish trend to take advantage of it. All right.
Yeah, next slide.
Yes.
That belonged in the other one.
That what, Dan?
You can skip this one. It belonged with the other one.
Okay. All right. All right. I love this slide. I do. I created this like many years ago. Why? Because you hear so many of the talking heads out there about having confidence in what you're doing and patience and discipline and the psychological part. Well, did you tell me how to do that? No, it's just this idea out there. And this is how I did it and how I explain it. Get the indicators off the chart. Get the squiggly lines off the chart, the Ichikumi clouds. Clarity starts to come. And I'll share with you my journey in part. It got so bad that the horizontal lines that connect the whole numbers created analysis paralysis. It's like, will they stop there? Will they stop at the next trend line, which is another useless piece of information? So once you remove the subjectivity and focus on the king, the price, things begin to get clearer because the less you have to think about, the much better it is. And there's always this fear that, and believe me, if you decide to take off your Ichikumi cloud, you're going to have a moment of fright, right? And because, I call it trading naked. And you're going to have this feeling of you don't know what to do. But that's your transition from red to green, right? You get rid of the indicators and you start seeing the green begin to form because it brings clarity. And so what we're explaining today and what we're going to look at, if you'll share your trades, you're welcome to do that and post it in the chat now, is it creates a thought process. Once you have a thought process that you have confidence in, you learn to have patience and discipline. That is how this all comes together. And so you develop the thought process and it works. It just works. This is an example of the confusion, the maze that's in here. And like we all see the guy on CNBC now with his finger on the screen, drawing lines, connecting dots and projecting them into the future. And, when you think about it, if you're talking to a child, which is, I kind of make this analogy, we're not children, but if you're talking to a child, and we're all susceptible to things in this manner when we're starting out because we really don't know anything. But when you see the guy on CNBC connecting dots, or you're in a webinar and they're connecting dots and projecting it into the future and telling you it's support and resistance, you believe it. I believed it as well as with the Fibonacci stuff and cycles and all this craziness. And then eventually you start seeing violations of trend lines. And it's like, oh, that's going to go into a downtrend now. And it rips right back up again. It's like, how the hell did that happen? And as you see it enough times, you have to begin to question the validity of all of these things that we're told are necessary for technical analysis. And when you do that and you say, you know what, when I boil this down to common sense, it's really stupid to say I'm connecting these two dots and projecting it into the future, and it's going to violate a trend, or it's going to be support or resistance in the future because I projected it there. Sometimes it becomes a self-fulfilling prophecy because if enough people look at something with a certain belief, they can create something to happen. But ultimately, time and time again, you will see situations like this where the line gets broken. Maybe it comes to another line and holds, but if you look to the left, you find that there's support there, little breaks like that. And before you know it, and I've seen this, I've seen people draw charts where they got lines more than this all over the place, intersecting with each other. And of course, sooner or later, they're going to say, see, I told you, there it is. There's the line. It caught it. Right? It's that maze of confusion. And it's really a ridiculous concept. Um, join us in the green room. You can take a trial. However, with the end of year specials, you can join with an annual subscription. It comes to $1.60 a day, which getting trades explained, your questions answered, your trades, some of what we're going to be doing today to be talking about your trades. Hopefully you'll share them with us so we can look at them. But subscribers to the chat room share their trades. We discuss their trades. We discuss our trades. And we look at the good and the bad. We're not infallible, of course. We have losing trades. We have a lot of great trades. But every day in the green room is an educational process and a trading. It's a trading community where others that are sharing, it's just great. So, to join at this time of year, which most do, it's a no-brainer. All right. A plan. Do you have a plan? Do you use the plan? Or are you just going to the next webinar and trying something else, which honestly is really just part of your learning process that, you're trying to figure out who knows what. Does it work? Does it not work? And so the internet being what it is, having it evolved, there's just so much information out there. And now with the evolution of AI, you can go ask ChatGPT or Grok or whatever, hey, is this a buy setup? And you're going to get more opinions. Brain damage. At some point, you got to make some decision as to what makes sense. So there was less of that when I started out because there was no internet, but still there was snail mail. It was enough information out there, and of course the indicator-based methodology. So eventually you got to come to some. This is your world, so to speak, and that's it. You continue to follow it. So you can make that plan, and most traders spend little time following up. What does that mean? Well, capturing your trades at the end of the day and journaling them, right? And what you've learned as to this worked, this didn't work. And I always tell everybody, when we talk about it, if you keep a journal, the good and the bad, or the woulda, coulda, shoulda, you find recurring patterns of what you do wrong and what you do right. And it's really, really helpful to do that. And you could there's a lot of stuff out there that's pretty good trading platform stuff to organize that information. But you have Microsoft OneNote on your computer. It's something that you can use. It's there right there. And if you open it up, you see it sets up like a notebook, like you had in school with the tabs. And, good trades, bad trades, woulda, coulda, shoulda. This is my market bias. You make whatever you want. And then you put it in to those tabs and you keep track of those things. And I said, you'll see recurring themes. All right. We have next here. So I don't see that anybody put in their best trade of the last week or two or their worst trade. Don't be shy. Put it in there. Let's take a look at it, because next thing I'm going to do is going to bring up the charts, and we can look at a few things if you don't want to share, but if you do, I think it'd be great to have discussions about your own trades and what we think about it and have that discussion. It'll give us that. We'll talk, and these are the things that we'll talk about. Multiple time frames. I'll bring up, if it's an intraday trade that you've done, I'll bring up intraday time frames and we'll take a look at it and we'll put that in the context of the daily time frame. We'll see if it has a tradable void there or not. And I'll explain to you what a tradable void is. Look at candlestick patterns and how to put them together with the trend, support, and resistance. And I always like to talk about the psychology behind the patterns. And I often share this in MT Lives about how that was something that struck me years ago. And it was from reviewing trades. And it was like, how did I sell the bottom of the move again? Right? It's like, first of all, you got in the trade at the wrong time and held on too long. Did you even have a stop to pay attention to? And then you went into not so smart hope mode. And when the pain got bad enough, you exited the position. And then in retrospect, it started to go up. And after seeing that a few times, it's like, there must be a picture of stupidity on the chart or just, mistakes. And there's pictures for that. And there's pictures, I won't say for everything, but there are many pictures that communicate what others are doing. Right? So what is it? Can the thought process be automated into a trading plan on trading platforms? Well, it's automated into a trading plan in what we call a course, an MTS course. That puts together all of the concepts into a plan and a thought process. Now, could you put it into a trading platform? You can. And I did that with Metastock. And not the whole process, but a trend following process. Metastock is a platform that I started using decades ago. It's a great platform, but I've used other platforms as well. In TC 2000, I created scans and layouts, which when you become a member, either through the green room, subscription to the letter, or a course, if you use TC 2000, and we don't have any affiliation with them, it's just a platform that I've used for decades as well and created these layouts and scans. We share that with you as a member at no extra cost. So, and many of our subscribers use it for swing trades as well as intraday trades and options. I don't use it for executing trades, but as far as finding trades, it's a must for me anyway. There's no other platform that can do what it does, in my opinion, not without crashing your computer, because there's just too much. These other platforms like TradeStation, it's just a resource hog, because the scans and layouts I've created, there are, I would say dozens of them, and they all run at the same time without slowing your computer down. So it's a fantastic platform. So yeah. So let's continue. We've got a couple of more slides that Dan put together here, and then we'll open up the charts.
Yeah.
So
I
what, Dan?
don't think we need it. That's just another example of how we're gonna be responding and answering our analysis of charts. So I don't think it's needed. But
Okay. So for those of you that may be new to this MT Live, so from the beginning slide was some of these. So let me put it this way. The beginning slide was the broad picture of our concepts. right? Support, resistance, trends, multiple time frames, so on and so forth. Within those broad concepts, there are subsections. Some of them would be, the void, individual candlestick patterns, pivots, and in here, trend changes. How do you determine that? Bullish setups. As we look at this, and you see how this trend developed, and you'll see there's moving averages on here and volume. Moving averages are subjective, but as we associate them to how they communicate to us about what's happening in multiple time frames, they can be a powerful piece of tools or information that can guide us to a bias. And we'll continue to look at that as we open up the charts. Right. So this is an example of a student shared. I don't know, you want to review this, Dan, but
no, it's just to show that that's part of the learning, which we're going to be doing here today, reviewing your trades, whether it's a past trade or future trade. But this is so much of the seasoning of your own trading career, which is analyzing the trades after the market. The market's not moving in your face. And Greg already kind of said it earlier, and in his own experience, is like, why did I sell there? And this is an example of one of our subscribers marking up his own chart. And these are all, every word on this chart is his. He's like, here's my entry, here's the reason, and here's how I managed it. And he's doing self-analysis. And when we're trying to learn, we're trying to get rid of the bad trades, right? And then we're also trying to improve trade management to get more money out of a trade, right? And so if you eliminate both, not eliminate, but fine tune both of those categories, then your P&L is going to go up over time.
okay. This is our end of year specials. We did something a little different this year. You can click on any of these and it opens up another page where you can see what this bundle is. But what we did is we took 3 courses related to Master Trader Technical Strategies. You click on that, the money management course, the gap course, swing trading course, and you can get that for a phenomenal price. All of them. It's hours of education. You can spend some time watching it after the turkey. If you're falling asleep, just watch that. This one is about options. Oh, down here is about options. So these are, as I said, bundled together, options and MTS. These are just separated. So you might have the swing course, but you'd like to sign up for the position and money management course. Again, they're all discounted this time of year. Here is the green room, $1.60 a day for the whole year. It's phenomenal. And the swing letter also discounted at this time of the year. And these are separated options. This is separated MTS, as says gap, swing, and money management. And this is credit spreads, directional options, and volatility. So, all right. Let's look at some charts. Let me bring them up here. So over here. And let's me. So depending on what you ask us to look at, I'm going to either look at daily, weekly, or I'm going to look at intraday. So let me see what we have here. We've got a few here in social media too. I'm not going to forget about you in social media. So Brandon asked about FAS, which is a leveraged ETF, right? Bullish, 3 times leveraged financials, right? So daily chart, let's put this on a weekly chart. Now, how did he say? He bought a call. All right, so we may have to look at intraday charts for this. We bought a call today expiring in January of 26, $165 call at the money at $10 each. And it's now at 11.50 each. Well, what are we dealing with here? I don't know that you needed to go out to January. Dan could expand on that.
I was gonna say the same thing. It actually hurts you
Yeah,
because,
because it's going to move slower.
correct.
Yeah. So
And
you've got this giant rounding top here, like big rounding top, bearish. It violates the low. Now, this is the fly in the bull ointment for the end of year, and that if the financials fall apart here, it's not going to be so good. Declining 50 MA. That's going to be a self-fulfilling reference point for traders to look at. Now, that being said, now let me go here for a second. Let's look at the 65-minute chart. Beautiful upward move and bottom. Love it.
W bottom, yeah.
Yeah. Entering it today, I can't say I would have done it coming up into resistance, but I'm glad it's working out. I think the seasonality is really helping you in a huge way. In addition, that it hasn't gotten up to this declining 50. Now, if this continues up, I don't know what it'll do today. So far, it's not showing any signs of slowing down. And let's look at the 5-minute chart. Still in an uptrend, higher highs and higher lows, continuing to move up here. Now, if you get fortunate enough that this was to percolate up into this area, now, if you would have bought options expiring next week, you'd have made more money. But should this move up into here, I would take the money. But so here's the hard choice of that. Here you have what they call a bird in the hand, so to speak. Here's the money in your hand that you can take it, or do you want a chance that it continues to go up on Friday morning, that you can close it out on a gap up? What should I do? Choice. Can you have the money now? Do you want to take a chance on more money on Friday? Or maybe it gaps down and the money you could have had, you'd have been woulda, coulda, shoulda. And you can't blame yourself for that because it's got room to go up, as you can see. Or say if you had 3 contracts, maybe you would sell 2. It continues up into the end of the day today. And you sell 2 and you hold on to 1. You don't have to do an all or nothing thing if you have enough contracts. So that's another choice. But at some point with a pattern like this, sellers are going to reemerge, whether they do it here or whether they do it up at this high at $173, $4, where you would have been like, man, if I would have held on to them contracts, would have been amazing. It's the unknown. You start trailing. Okay, I'm going to put a stop under the prior 65-minute bars low. Or you might say, well, what if I use the 30-minute, Greg? Well, maybe that's a little too tight, but it's you have to make choices. That's a trading plan. That's choices. All right, what was the next one? Julia said, well, you are adventurous because this stock is an animal. I mean, it does some crazy stuff. Biogen, it's a biotech. Look at that gap down reversal. That's super bullish. What did you say? You're long since 1120. Okay, great entry point. Right here. Great entry point. It's a little continuation type of a pattern right there. Red bar ignored. And the next day, yeah, okay. So you're in trail mode. This is a wide range bar. It's bullish. The topping tail bar didn't result in a move down. This sector, if you look at like XBI, let's go to the weekly chart there to see it's got some room to move up. It got past 180. Another thing you might want to look at is, I don't know if I have options on here, maybe not. I would look at an option chain. and look at where it has a high open interest of call options. Go out next week, get a better insight, and 185. So 185, it's gonna have some resistance there. And you can see the open interest 47. Not a lot, but there's some buyers. There's no bid and offer. Well, there's an offer there. Somebody looking to get lucky. Some idiot to pay that, but there's no bid expiring at Friday. But somebody's trying to sell up there. They think it's going to go up there. And anyway, so this would be where it's going to possibly run out of some steam because of those uh, calls there, which it's right there, and you see it's stalled as it's tried to get up there yesterday. But you got to start trailing it to lock in profit, and maybe it can keep going. So yeah, looks good. I said XBI, biotechs are on fire right now because of AI and the health industry and so on. So it's underperforming the sector. And then there's BBH, they're getting extended here. But the weekly is extended, which we've seen a lot of stocks that were in favor like that. But the daily, it's a little extended, but kind of plodding along, still strong. And maybe this could be your guide as to maybe getting up to $200, a whole number. You can see it lines up with that pivot there as a guide. So keep that in mind. Let me take one from our friends on social media. MU last Friday on the 160 minute. So we could look at 160, and we use the 65 because it just breaks it up into equal increments. But I'll look at the 60 minute, and you said 60 minute 180 became a 123 last Friday. Tuesday? Huh. Last Friday. Friday. Tuesday. Monday. That's still May. Okay. Well, it turned up from there. You can see the daily time frame came down to major support and a bottoming tail bar. Not such a great direction, I'll tell you the truth. But it was kind of semi-climactic down there. Let me get rid of this. It's here. Yeah, so we can see it a little clearer. Um, there was this resistance. I wouldn't have gone long, but the semiconductors got beaten down enough that maybe they would retrace back up again. So you said over 240, 250, 240, 250. You just buy it. Yes, you bought it yesterday. I would never buy this yesterday. Two, it don't make sense what you're saying. That number, 240, 250 yesterday, Jerry. It's not even at 240, 250. Or maybe you think that's where it's going. Oh, that's AIM. I'm sorry. I'm looking at the social media one where he's talking about the 1, 2, 3 on the 60-minute pivots. All right, so here's the pivot there. And again, I wouldn't have bought this, tell you the truth. It's just too sloppy and it just got creamed. But as an extended move, I get it. And entry 206. 206. 206. Okay. So, oh, I see what you're talking. It was way back here, the 1, 2, 3. As a counter trend trade, I mean, you don't know that it would have done this. It did have a void. Now, these 1, 2, 3s recently, over the last couple of years, they have had a higher tendency of being stopped out by trading under that, and that's the essence of a 1, 2, 3, 4. But if you hung on to it through here, congratulations. Right? Continues, you raise the stop to 216. Right? As it pivoted on the 60 minutes, so you've managed it from there. Excellent. Excellent. You know, it not too often, and this is more, I think, based on the seasonality. And you can look at, like the weekly time frames are still bullish, but you typically do not get 100% retracements of a bearish bar of that magnitude. So, we do look at things from a historical perspective and to say, my trading plan is that from a historical perspective, prices don't retrace 100% of a wide range bar. Sometimes they do. And that's the essence of, a wide range bar creates voids. And this violated this pivot here, when it came down to this one, so it was definitely damaged. And ultimately, I think after this holiday, I would not be surprised to see these semiconductors roll back over and come right back down here. There's no evidence of that yet, but it's certainly a thought to be considered after this pullback. And you can look at SMHs and you see how the way they came down and violated all of these pivot lows. And so the seasonality, this bullish period, um, you know, Thanksgiving is usually bullish, and this year it is as well. This is coming up to this resistance area. All right, what do we have here? Jerry had AMAT, which I got confused with the MU. Over. So I don't know, Jerry, if you bought it based on what? Intraday 242, you bought it as it broke out above 242, as it took that out. I'm not a big fan of buying things after they've been up this much. And you didn't say whether you utilized any smaller time frames to say, whether it was breaking out, but like this is just moving up. Don't take this the wrong way, but for me, from my own perspective, this is chasing because it's not a move, even on a 5-minute chart, a break above this here. I'll come back to that, the MU. So this is a continuation on a 5-minute chart, but you might use 15-minute charts and where you would say, hey, this is in an uptrend. I'm going to buy it here on the pullback. So that's the bottom of this bottoming tail bar right there. Again, I direct you to the chart of the week I did last week, the transition from red to green. There's also transitions to buy the bottom of a bottoming tail bar, which is at the essence of this right here, utilizing multiple time frames. And it's moving up the 15 minutes in an uptrend, bottoming tail bar, bottoming tail bar, bottoming tail bar. Buy it, stop down here. Stop means share sizing. And it continues to move up. All right. I thought I'd go back to MU. Do you want to trail 2-minute bars lows, 2 bars prior to that? Well, this little pullback right here, you definitely want to put a stop under there. Because if it breaks that, clearly something's gone wrong, but you're using the 60-minute time frame. And so once this bar is done, the same place, I'd put a stop, below 230, somewhere below here, like 229-ish or so. If it breaks down, you can see it's right at resistance and it's stalled, but it's not giving it back yet. Bitto. Oh, breakout. Brandon, best trade of the week. ANF. 1128. 1120. Calls expiring this week. The The $280 calls. Dan, decipher that. It's confusing me. He said, I think he means BIDO, but I don't get the $280 calls. We closed 3 contracts too soon. Because I don't see anything $280. And I know ANF broke out on the earnings this week. But that's not $280. Maybe I lost. Hey, Dan, you there?
Yeah, I don't know where you're getting Bido. I'm looking.
Look at the chat. He says his best
I-
trade of the week yesterday at 9:30 Central. BTO 3, ANF.
Oh, BTO, I still don't see it, but BTO is bought to open.
Well, ANF is nowhere near $280. So I don't get that. You can retype that.
Yeah, I don't see the text. I'm looking.
I'm just looking at the chat. Okay, you can retype that in there. Brandon was saying
$80.
seasonality trade on FAS.
Yeah, $80 call, he said.
An $80 call yesterday.
Yeah.
Okay.
So I mean, if you did it prior to earnings, then you got lucky because that was a big gap way out of the money. If you did it after earnings, um, you're still paying a lot because it's jacked. And I can't honestly say I would have done that because that's a big old gap. Glad it worked for you. the yeah, the retailers have ripped. Greg, look at GAP. I gave this in the green room as a retailer gap trade yesterday because it wasn't anywhere near as extended of many of these other earnings gappers. So, that one gapped just over the high of the 2 bars and did whatever 10, 15-minute high, whatever it was.
Okay.
So many of those other retailers, KSS, ANF, they just went crazy this week.
Yeah. So this is the retail ETF, and pre-market, when we do pre-market review, I showed the market internals and how the breadth internal gauge had spiked over the last few days, and this is one of the reasons why. Maybe short covering, maybe the end of year rally type of thing, Thanksgiving Day rally, but money just went into all the garbage, so to speak. The retailers, regional banks, a lot of things that have underperformed, just, money rotated into that out of NVIDIA or wherever it was, into these things, and we had this big spike up. But all of these things that have moved up the last couple of days are coming into, resistance areas. So, it's highly likely that they're going to stall probably after Friday. Yeah. All right, let's see what else is here. AMAT, how does AMAT look on the 5-minute? Well, it's rolling over right now. But, if you were, like, if there was 0 DTE calls, which I don't think there are on this, but if there were, like anything that would be 0 DTE that would be extended intraday like this is, and you wanted to sell a call spread, this is the kind of pattern you would do it on, where you've got multiple pivot highs, these dots here that mark 3 lower highs to the left and right, and you got this little rounding top. That's the kind of pattern you'd want to do a 0 DTE call spread on, with something that's extended on the daily time frame and up near, $250. I would venture to say, I would guess that probably that there is a high open interest in call options there. And you can see it's the highest strike for open interest expiring tomorrow. So this is an excellent guide, open interest in options. If something's going down, you want to look at the put options. If it's going up, you want to look at the call options to see where it's got the most open interest there. And it doesn't mean it can't get through it. It means that on a short-term basis, it's likely to stall, kind of acts like a wall, right? Option guys have really big names like Varna and Charm and all of this crazy stuff, right? And call walls and put walls, it makes them feel, big, Anyway, it tends to be a resistance area. And when it goes sideways like that, what you find is that it's this inflection point. And if it gets through it after going sideways, it tends to have a little mini explosion where it continues, where those market makers now have to flip. So it's it's a powerful thing to keep an eye on. All right. Back tested, another 10-year back testing season right now to take is GLD, which I know is bullish. It's in a bullish trend. Inflation concerns, they're going to cut interest rates, you know. So I think it looks to me like it's going to keep going up. Yeah. All right. 10 years. So Brandon was sharing seasonality there. It was great. Wish you could send pictures on this chat. You can. I don't know if you can. You can put a link, Brandon. If you capture it and you have a public link, you could put it in there. In there. Oh, I just got an alert on coin that I have set.
Yeah, I have coin and yeah, and also check this out. It's the look at WIGMI as the miners ETF. That's a nice little bottom. And block went today. I saw.
Mm-hmm. Yeah, so Bitcoin miners,
Mhm.
Bitcoin has been under pressure.
We bought Riot today.
Yeah, yeah, yeah. So these are extended counter trend trades. Yeah. Just down a whole lot and it's reversed up. Shorts cover. People that believe that it's going to go higher, of course. People buy calls and that can help propel it up towards some area of resistance. Yeah. So, and notice how it broke down. So at the beginning of the MT Live, and in kind of when we're going through the slides, we talked about, the psychology and how patterns and pictures reflect the psychology of what is happening to other traders. So this was in a bearish trend. It went sideways for a while. These are lower, I wouldn't say higher risk because the risk is determined by your share sizing, but let's call it just a lower probability breakdown kind of a setup because it's so extended to the downside and it's in an area of price support. So when it broke down and it sprung right back up again, what that communicates is that there are traders, institutions, whoever they are, lurking down there looking to buy this cheap. And so they're bidding down there. And when it starts to move up and they decide that, hey, I'm not going to get filled on the bid, I better take the offer, it helps drive it up to the resistance area. And now, it's got room to go up. So if we look at the 65-minute chart, you'll see what I mean, how it's cleared this bottom. And now look at the bottoming tail bar on that formed here. And that supports a bias that it can continue to go up. Right? Yeah. So this really looks good, like it can continue to move higher. So that's great. Let's take a peek at what the markets are doing right now. And spiders, Qs, IWM, and the Dow. These red lines mark options expirations. And you can see I've got lots of them there because knowing when an option expiration is, the black one are quarterly options, the red ones are monthlies. And a lot of times, sometimes you get a continuation move, sometimes you get a reversal like this. Paying attention to options expirations makes sense. It's another tool. Now, spiders are coming up deep, deep after this decline, which this breakdown moved the trend to down. That's one of my own rules, meaning it doesn't have lower highs and lower lows yet. But historically, any momentum move that violates two prior swing lows, it continues to go down. And so seasonality saved the day here. And now spiders are in a trading range. So we're back to neutral. And right now it looks like this can go up to that high. Because there isn't much to stop it from going up. There's an unfilled gap right there. And I don't know what's the highest volume calls being bought today, but that could be something to guide. The Qs are underperforming. You can see how far they are, and I don't need any relative strength chart or fancy indicator to communicate to me that this is underperforming, because I can just look at the chart and say, hey, that is far from that high. This is close to this high up here. This is doing better than this. Now, if we wanted to see why, I would then go and look at individual stocks that are in the Qs, or we know semiconductors are underperformed. We know software has been underperforming. Software underperformed big time. IWM, which broke down the worst, and it's come back the strongest, and it's cleared this pivot high. And you can see my cursor lines up with the other reference points on the other indices. And so that clearing that pivot high already, this is moving up because interest rates came down. And interest rates, this is the intermarket analysis part of what we look at. So interest rates, they were threatening to break out and they started falling. And that helped the broader markets, and it helped small caps move up. So we're going to keep interest rates are coming down toward support now, and we'll see what they're going to be doing at the beginning of next week. As far as Friday goes, historically, it's a half day, until 1 o'clock. Typically, the markets come out of the blocks and they go higher for an hour or so, and then things just go dead. We come back next week. So this is a positive event. And the Dow, you can see, that got clobbered and it's coming back. So it's not like they're all doing well together. This is doing well. Some more speculative, right? Small caps, small companies. So that come up quite nicely. And if we go and look at weekly time frames, right, got a pretty bullish reversal day, but it's still a sideways trend. And it's just chopping sideways overall, right? These were in an uptrend, like that. I guess it was in an uptrend as well. It's starting to go sideways. Diamonds in an uptrend on the weekly time frame. The Qs in an uptrend on the weekly time frame. So if for some reason, I'm not predicting this, I don't know what's going to happen, because right now things are aligned for prices to continue to go up, maybe just into the end of the year. But for whatever reason, if this was to turn down next week and we were to get something like this, and we would see that develop on the daily time frame first, if it was going to happen. If that was to happen, and now the weekly time frame rolled over, again, I'm not predicting this, I'm just making my thoughts because it's a thought. I don't know what's going to happen. But if this was to roll over and this started to come down and we got the weekly and daily time frames aligned lower going into next year, there'd be trouble, right, for bulls. Right now, buyers are in control. Weekly time frame is up. We're going to see how much further the Qs can get. And the rest of them. See what they're going to do on Friday and, of course, into the end of the day today. And for the moment, they're all just marking time. Buyers are not giving it up. They think it's going to continue to go higher. And so even this little dip came right back again. And I hope you enjoyed this MT Live. We're going to send out a recording for this to everyone. Typically, we don't. It's part of MT Advantage, where you get MT Lives, you get the recordings, you get trade reviews of a real trade that happened during the week and lessons. So it's awesome. But look, we'll be back next Wednesday. Again, happy Thanksgiving. Best to all of you. Thank you for being subscribers and joining us for these MT Lives. Be safe. Enjoy the time together, and we'll be back on Friday. All the best. Bye-bye.